Hello, hello. I'm Lori Alvarez, and I welcome you to Real Estate with Soul, the podcast. This is where I will share my story, knowledge, wisdom, and the legacy in real estate, and my family, all boldly wrapped up in one with you. So let's get started. Hey, it's Lori Alvarez, and I have Justin Brown with me today. Justin, how are you?
I'm great. How are you doing?
I am fantastic. It's always great to have you back on the podcast. So Justin was like on podcast number 2. And like I'm at podcast recording number 56 now, Justin.
That's awesome. Congratulations.
I hear that's a big deal in the podcasting world.
Yeah, that's a big commitment. I've tried to do podcasts. I couldn't even do one, so 50 something's awesome. Congratulations.
Yeah, we do weekly now, and we're excited to have you on. You're one of our most amazing preferred lenders we have as part of our referral group for all of our amazing clients that we work with over and over again. And I know a lot of our listeners that are listening right now know who you are. But again, just tell them, set all the humility aside, Justin, and tell them how amazing you really are and your team is.
I've been doing this about 20 years. And over the course of 20 years, you usually get pretty good at stuff. I've built a team over the last 10 years, and I got an amazing team right now. The culture, the way we sync together, just the process and the flow. It's just, you've worked with us for a while, and it's just gotten better and better over the years. And right now, I have an amazing team that just helps make the whole dream possible for us and the clients.
Yeah. I have to say, so I connected with Justin, just to kind of recap, I connected with Justin so many years ago with one of our repeat clients that we have. We've helped him buy and sell real estate like 4 times already. He's awesome. So. And I'm sure you've probably done a couple refinances for him through it too.
Yeah, him, his family, everybody.
Yeah.
Yeah.
And we love our repeat clients. We love it. Because that just affirms that they love to be in business with us. And so I got introduced to Justin, and I've been working with Justin ever since. We just love working with your team. You're so, in all honesty, easy to work with, right? You're highly communicative. Everyone knows what's happening. We know right where we are in the transaction. And so there's never any questions asked from the seller or the buyer perspective. Like they're just like, okay, maybe the one question that's asked is, wow, you want everything from me. Why?
Yeah, the firstborn, we get the firstborn, the DNA. We even need to know what kind of like soap you use, all that stuff. We need everything. Yeah. Unfortunately, I wish we didn't. I would love to just say, hey, you know what? I trust you. Let's go for it.
Yeah.
Loans funded. But it's not the banks unfortunately require quite a bit these days, which is healthy for the market.
So I just wanted to have a little conversation. There's a couple of things I wanted to touch base on, but I loved what we were just talking about off the podcast, right? Which was the whole eviction thing that's going to happen and the lift of the government lift of the COVID mandates and so forth. Yeah. So go ahead, give your perspective on all of that, because everyone right now is like, oh, all these landlords are going to start selling their properties and our inventory is going to increase and we're going to see this and we're going to see that. Give us your feedback on what you're seeing, Justin, and what your perspective is.
So my perspective is, one, as a lender, been in the business a while, been through some cycles. And then 2, as a landlord myself, I have 29 units across the country. Yeah. And I'll tell you right now, with the eviction moratorium that's been in place, there have been some struggles and the profitability's been down and all of that. So if there was ever a time to sell those properties, for me, it would have been during the eviction moratorium.
Yes.
To kind of move that money around and go utilize it somewhere else, where now that the eviction moratoriums are being lifted, I'm not selling them now. Now's the wrong time, because now I could start increasing rents, which a lot of them I've held off on, and I'm going to start seeing my profitability go up. So my opinion is no, I don't think landlords are all of a sudden going to sell now that they're going to potentially make more money and be able to raise rents. But I do think you are going to see rents go up. They've been going up, but I think this is going to fuel that, unfortunately.
Yeah, I love that perspective, because that's the reality. Like everyone I'm talking to, if they've got a tenant who wasn't paying, during this eviction moratorium, right? They just put the house up for sale and move on with life.
Yeah.
Literally, that's all they had to do, and they could do that. And so many people had this thought that, oh, I can't sell because of all of these rules and regs that have been come down from the government. And the reality is, you can sign a contract and move the property onto the market. It's just a
Mhm.
time frame, and it's a little more complicated with a tenant in it.
Yeah.
Um, but it can be done. And now, like every landlord I work with, and as you know, I'm a landlord too,
Hmm.
all of them have been holding off on increasing rents. All
Yeah.
of them have been just like, let's just hold steady during this time. I'm getting my rent and I'm happy. And now, as rents, as contracts come due and leases come due, people are like, okay, now I'm going to increase. Things are improving. The economy is improving. Everything's looking better. And rents are, I'm going to say, super high right now.
They are. They are. And but unfortunately, well, not unfortunately, but as a landlord, some of the properties I've picked up over the last 12 months were under market, and I bought them knowing they were under market, and I bought them knowing like, well, I'll just ride out COVID. They're profitable enough for now, but the goal was when the moratoriums end to increase the rents on some of the properties, because the market rents overall, even though they have come up and they are pretty high, I think they went up like 14% in Riverside County last year, something ridiculous. Um, they're still going up.
Yeah. And so here's the interesting thing, Justin, because like, every weekend we're on open house and we meet new buyer opportunities and we're like, oh, well, would you like to buy a house? Well, I'm not pre-approved. And so I had this one that reached out to us this weekend and she's like, well, my husband doesn't want to move forward because he thinks that sales prices are just ridiculous. And I was like, "Oh, that's an interesting statement." So I just replied back and I said, I was looking at rents and rents are just
Yeah,
crazy
yeah,
and there's no inventory out there. So I don't know, maybe buying a house with it super cheap interest rates is a better idea than renting from someone else that you're not going to make any money back on. That's just
yeah.
the reality.
No, absolutely. And honestly, the market crashed like 2007. Around 2009, it kind of was like flat, but people kept waiting for the bottom.
Mhm.
When the market's going down, everybody wants to wait for the bottom. When the market's going up, they want to wait for it to come back down. And along the way, you get analysis paralysis where people just never pull the trigger and they miss huge opportunities. So all the people, I know a lot of people that have been sitting on the fence since 2009 and continue to sit on that fence, and it's cost them lots of money.
Yes.
One of the things that I looked at the other day with somebody too is I talk a lot about investing, index funds, retirement accounts, things like that, that I'm just all into personal finance. So I dive into that stuff with clients. And I was showing somebody a projection that, look, if you put, $1,000 a month into the market, and let's say you get a 10% return over 15 years, that turns into about 300 something thousand dollars, which is
Mhm.
great. But I also said, well, look, we were looking at mortgage payments, and the mortgage payment was going to be about $1,000 more a month than his rent.
Yeah.
And I was like, look, you could save 1,000 a month and hope to make 10%, and it turns into 300 and something. But if you buy this house, you're going to have forced savings, and the equity and net worth you'll have in 15 years with the same extra amount was actually going to be $770,000, and that's based on just a 4% appreciation on real estate, which is pretty conservative.
Yes.
So just at the end of the day, everybody has a future we all have to worry about. We want
Mhm.
to make sure we're set and we're in the best position possible, and the wealth you create through real estate is just unmatched unless you marry a sugar daddy, sugar mama, win the lottery, become a professional athlete, become a professional. There's ways, but they're not as likely, and they're pretty hard and rare. And the common person's way, the easiest way with the low barrier of entry, not a lot of out of pocket costs, is absolutely real estate. You could diversify and put your I do I max out my 401k. I put money in a Roth. I have brokerage accounts from investing in stocks. But again, over time, anytime I've done the math, historically, real estate outperforms it. And it's a huge pillar for your future.
Yeah. And so here's the interesting thing, because, I just keep getting told, "Oh, it's just a terrible time to buy. It's just a terrible time to buy." And I'm like, I bought and closed on my property in January, and it's already worth $80,000 more than what I paid for it in January.
Yeah.
you know?
Yeah.
And I know, Justin, you're buying as well.
Yeah.
Like,
I'm still
you're
buying.
not backing off of that. And so I think that says a lot about the opportunity out there. Like, I've had so many people push back, and they're like, "Oh, well, I don't want to have to have a loan, and I don't want to have to do this." And I'm like, if it's an investment property, like, you're just borrowing your credit for someone else to pay it off. Like,
Yeah.
they're paying it off. You're just
Yeah.
using your credit. That's it.
Absolutely.
You know? So
No.
it's just so interesting. So right now, Justin, what would be the one thing that you would recommend to anyone who's thinking about buying, but they're just like, no, it's the prices are just too high.
Well, the main thing I would recommend is that it's a long term deal. That you're not buying because of the hope of the equity you might gain over the next couple of years, because there are crashes, there are peaks and valleys, but those peaks keep getting higher and higher over time. So let's say there's a crash, and for 3 years the equity doesn't grow the way you want it, or even it goes down. That's fine, but you know what's going to happen over 10 years. You know what's going
Yes.
to happen over 15 years, right? So again, you could keep renting and have a 0% ROI and a guaranteed 100% loss, or you could take the gamble with real estate. And yes, maybe there's peaks and valleys, but we all know what it's going to do in the long run, the 10, 15, 20-year mark, versus having nothing in return. So just make sure it's a long-term deal. If you're trying to jump in and speculate and flip and maybe make a quick buck over the next year or 2 years, I wouldn't recommend it. And then the other part is just making sure it's within your budget. Like, the rule of thumb is you want to still be able to save and invest 20% of your income every month, and that will set you up for success because that gives you breathing room. And if you're doing it long term and you have breathing room, then you're in a good position to not have to worry about what the market does. It's a long
Right.
term deal, right?
Right. I would agree with you 100%. And I can say that over and over and over again, but they might hear it differently from you. Right.
Yeah, yeah, yeah. No, definitely.
Because I mean, the whole thing is, at some point you got to come into the market, right? So you decide what you're going to do. If you're a cash investor and you're buying, hey, this probably isn't the market for a cash investor,
Yeah,
right? Unless
yeah,
you find a fantastic deal that just is stellar.
yeah. I like to leverage money. I would never buy a property cash because
Yeah.
you could just make so much more money with your money when you're borrowing it at 3 something percent. As an investor. Um, and then the numbers just have to make sense. I see a ton of people buying investment properties that the cap rates are just super low, like ridiculously low. And that's all based on, and they're buying for speculation because they assume the value is just going to keep shooting up, which again, over time it will. But I don't like that. As when I'm buying rental properties, I like higher cap rates because then I'm more concerned with the cash flow than the appreciation when it comes to rentals. But when
Yeah.
it comes to a primary, then it's all about the budget. It's all about making sure I'm not going to be house poor and I'm not strapped with my mortgage payment, that I still have freedom and breathing room. So if somebody is looking at buying and that payment does put them in a position where they're strapped, then I wouldn't recommend it. I would recommend looking at different options. I would look at different markets. I would see if you have an opportunity to work remote and then buy somewhere else. One of my team members, I don't know if you know, she bought in Tennessee.
Oh,
Yeah.
I think I know who you're talking
Yeah.
about, because
So
I've seen some posts from her
yes.
in Tennessee.
So
I
she
thought
bought
she was on vacation.
No, she bought a beautiful home out there, a brand new build for 400 and something. That it wouldn't have been. There's no way to get that property around here,
Yes.
and it was amazing. It was cool that she was able to do that because we're all working remote, and I was like, hey, go for it. That's amazing. So not everybody's in that position, but it's just, look, if you're in a spot and it just doesn't make sense locally, then it's time to look at other options, because again, it's all for your future. When you really look at what's important later in life, it's having, being able to retire. It's being able to live comfortably. I know so many people that are working into their 70s and beyond. And I think that was like 80% of Americans like just don't have what they would need to retire. And I think it
Oh,
might be beyond that. I looked at a statistic the other day and it was pretty staggering. And again, the number one way to build wealth is through real estate because it's a low barrier of entry. it's, with the amount of money you need down, with credit, with all the things it takes to get into it, it's really the easiest way to do it when it comes to everything else out there.
Yeah. I I I again am just gonna affirm what you're saying. And it's just a matter of, look, I know when I bought my first house in San Dimas, I bought it for 169,000. I can't buy a darn thing in San Dimas for
Yeah.
169,000. Like,
Yeah.
you're lucky if you can get a car at 169,000 these days.
Yeah.
I mean, a nice car, obviously.
Yeah. If they have it, it's like with the inventory issues they're having.
Right? I know. My husband's Hellcat is worth like $40,000 more, and my convertible, I hear, is a percentage increase of 30%. Like, uh, convertibles are up 30%
Yeah.
because of the demand for them right
It's
now.
crazy. I've always been an advocate of never buy new, always buy used, like 2, 3 years old. And then COVID's kind of changing that a little bit, because the discount you used to be able to get when it was used versus brand new was drastic, like 40 to 60%.
Mhm.
And now that's a lot thinner of a margin, to where it's like, well, it's not. You have to kind of rethink things and look at the numbers. But
Yeah,
anyways,
I think Ford is the only one that's really not cooperating, though. They're being difficult. They're
yeah,
still hitting that dealer markup and really hitting you.
yeah,
So, I love Ford. I'm a Ford driver, but yeah, they're being challenging right now because I
yeah.
looked at the newer Mustang and I was like, for lack of a better word, screw your dealer markup. That is ridiculous.
Yeah, yeah,
So so here's the deal, right? So we're excited to move forward with helping people buy. And what I really loved is that you said, like, be willing to go out of your area, like stretch yourself,
yeah,
go to that place that you've always thought about going. And there's so many right now that are doing that, to be
yeah,
completely honest. They are selling their houses right now and they're like, I'm out of here. I'm going out of state and I'm buying in another state, and they're not particularly buying them cash either. They're
yeah,
still financing because they're like, "Wow, look at all the house I can get."
yeah.
So, what does that look like when you're doing out of state purchases with regards to a loan?
It it,
How
de-
does that
it depends. Like, I'm helping a couple right now who's retired. They have their Social Security income coming in, and they are able to sell out here and buy something cash out there. But they just wanted to keep, have some money in the bank. And honestly, they really didn't have any retirement set up. They have their Social Security, but other than that, they have nothing. And so it's just amazing what they're able to do with this. Is, one of them was working part time still, she's able to quit. They're selling their home. They're buying cash. They are going to take out a small loan for about 100,000, and the payment on that I think is like 440 a month.
right?
And so they were super comfortable with that. They're going to have money in the bank, have this beautiful new home. So when you're retired, you're on retirement income, pension, Social Security, something like that, like a long-term disability, any sort of just income, like a benefit income, it doesn't matter. You could buy anywhere. There's really no geographic restrictions there. Now, when you're working a job and if I'm going to quit my job in California and go, move to Tennessee as well, I need to show that I have a job lined up out there, or I need to show that they're going to allow me to work remote, or I could work, that I could work from home. So if you want to buy in a different area and you are relying on your job income to qualify, you will need to show proof that you're able to work remote indefinitely, and or a new job offer letter from that new market. One of those things is going to be required to use that income. If you're self-employed, that's a little trickier, because if I run a business that is geographically located, like, comes from out, like as a real estate agent in San Dimas, most of your business is in the area, right? So if you say you're going to move to Florida, then there's going to be a huge concern of, well, you're building a new business,
Mhm.
and they're going to want to see a 2-year history. But if you do all e-commerce and it's all online, it doesn't
Mhm.
matter where you live, right? So just some things that are going to come up, whether you're self-employed, if you work for a company, or if you're retired. There's a couple different things, but
Well, so that's interesting because what if I decided I wanted to start my real estate team in Puerto Rico, San Juan,
yeah,
and so, like, I'm gonna build that business. I wanna buy a second home over there.
yeah,
I just gotta be able to do the qualification for a second home,
correct,
right? And show
correct.
that I'm still actively selling
Yes.
the real estate
So if you want to
here.
buy a second home in a different market to build a business there, that's fine. You're just going to have to qualify with the payment on that second home and your primary.
Got
And,
it.
and then you're, by all means, as long as you still have your primary residence, you still have your primary business, there's no concerns there, because you've shown that you have the income to qualify for both. Or you could buy it as a rental property, to help offset the payment, Airbnb it, and then go out there when it's not rented, and
Yes.
then be able to occupy it and build your business. It just depends, a couple different plans you can put together on how to make that work.
So then yeah, so now you know one of the things that I've been thinking about for
That's
so
awesome.
many years.
Yeah. Yeah, that sounds pretty awesome to me.
Yeah, well, I'm just thinking tax-wise, it's probably a little more beneficial, but I'm not sure
Yeah.
yet. I've
Yeah.
talked to my CPA. So, anyways, one of the things though is that I was just thinking is you're buying a lot out of state. Are you
Yeah.
doing your own loans? Do you still have the ability to do the loan, or
You're not
your
supposed to.
company is doing the
No,
loan?
my company's doing it. I actually used a commercial loan for the last pack of properties I bought, and I bought them all under one loan. I bought
Oh,
5 properties with one loan, and I was able to do 20% down on units. They were all units,
yes.
and that actually wasn't too bad. The downside is, if I have to sell it, that's kind of hard to undo because they're all under. If I want to sell one of the properties that's packaged with other ones, that could be a
Mhm.
problem. They did say there's ways to kind of refinance it and do that,
Yeah.
but so that is kind of a little bit restrictive. But no, so I've been actually using commercial financing for multi units, through local banks.
Yeah. Excellent. Excellent. So I was looking at that too because there's a multi-unit over here that I was very interested in. That's a live work situation. So
Yeah,
it could have my real estate office on the front and
yeah,
then rent out the back. Right. And then bonus, you get free Wi-Fi from me
yeah.
as
That's
part of
awesome.
your rent incentive.
Yeah, that's a nice little perk.
Yeah, it's something I just think little things like that. Anyways, with a mixed use property like that, you really do have to go commercial. You can't do
For the
it.
most part, as long as, so if you buy a mixed use property, no more than 20% of the space could be for commercial use if you want to use a residential loan.
Okay.
And so as long as 20% or less of the total space is for the business, then you're good with a conventional loan. If it's more than 20%, then yeah, you got to go commercial.
Yeah. Interesting. 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 Very good.
Or you could
Okay.
do an SBA loan, but I think you would have to be occupying that back space, if I'm not mistaken. Or you would have to be occupying over 51%, over 50% of the total space for your business. I don't do SBA loans. I've looked into them briefly. Something to that effect might be worth looking in if it's a business that's going to be for you.
Yeah. I have a client that's doing that.
Because with the
So
SBA, you could do 10% down, I think,
yeah.
which
Yeah.
is
I
nice.
think that's what he's doing because he's going to do a mixed use space
Yeah.
for himself in Vegas. So,
Nice.
okay, so here's the other thing then I want to just tackle this because everyone keeps talking about, oh, interest rates are going to rise. Interest rates are going to rise.
Yeah.
So, what's your perspective on that? Because I had one of my very brilliant clients give me their perspective. I'd love to hear yours.
Okay, so everything I'm seeing, I don't think so, because I think our economy has a long way to go to recover. So once we start seeing everybody go back to work, because in a healthy economy, interest rates could go up and people will keep buying. The real estate market won't slow down. And that's a sign of a healthy economy. People are making money, wages are growing, everybody's working, rates could start rising, the cost, and people will still buy. Right now, if rates went up, I think the market would go down like huge. And the other thing is the government's been manipulating interest rates since 2007 and or 2008 when they started doing the quantitative easing program, and they're still doing it, and they seem to have no problem printing money. So I can't imagine why the government would allow rates to go up if unless the economy was roaring, right? So if rates did go up right now, I do think it would crash the market. And with that, though, I think we have this infinity safety net from the government where they're just keeping rates down by buying billions of dollars worth of bonds, mortgage-backed securities, which is what helps keep rates low. So I don't think they would hesitate to turn that program up even further if they needed to. Like I said, with they're just printing money. So I think the government would be there to kind of keep them low until the economy is roaring. And I don't know if that's really going to happen, anytime
Right.
soon. So
Yeah. That's what I hear, that we have too much debt out there for it
Yeah.
even to look like an opportunity for interest rates to rise. It just
Yeah.
doesn't make sense
Yeah, I
right
agree.
now. And so if that's the perspective, then I'm sorry, what is everyone waiting for?
Yeah.
I
No,
mean,
if I
Justin's
thought rates were going to
basically giving
rise,
free
I'd be
money
all
away.
over it. Yeah. No, if I thought rates were going to go up, that's good for business in the short term. Like, hey, rates are going up, refinance, you know. But I'm not sending that message because I just don't think that that's what's going on.
Yeah, with that said, are you still doing a ton of refinances right now? What
I
does that
am.
look like?
I am. I am. 20-year fix. I just quoted somebody 2.5% on a 20-year fix with no lender fees. I'm doing a 30-year fix cash out right around 2.99, and one for even lower. Just depends on the equity. I have another gentleman who bought his property for 310 in January, new construction, and the value is now 385.
Mhm.
It's just insane. So he bought it with low down payment, and we're already refinancing to get rid of his mortgage insurance 9 months later.
Yeah.
Um, I'm still seeing rates are phenomenally low, and I think they're going to stay there for a while. But I'm doing lots of refi still.
Yeah. I mean, because I know, like, we're talking about our one investment property that we have that's free and clear right now.
Yep.
We're talking about pulling the cash out of that one and, buying another,
Yeah,
right?
yeah.
And so, because we wanna pick up another piece of
Because here, with the thing with that is, if you're going to take that money, and because you're going to look at the cash on cash return, if I'm going to invest X amount of dollars into this property, what am I making on that money every year? And if you're making 10, 12, 15% on that money you just pulled out at 3.75 or whatever, but you're making 12, 13, 14 on it,
yeah.
that's how you leverage money and you make more money,
Yes.
so, and rates are low enough to where it makes sense. You just got to, make sure you're putting it somewhere, you're taking into account that new expense, that new payment, and overall you still see that you're in the positive on your return with that money.
Yeah. Yeah. We just wanna pick up another townhouse, right? Like the one
Yeah.
that we currently have. We
Yeah.
love townhouse rentals. That's what we like doing.
Yeah.
Like, it's easy for us.
Yeah.
It
Less maintenance, less,
Yeah.
you
So
know,
it's an easy product for us to manage and handle where we are in our real estate empire,
yeah.
and one of them's free and clear, as you know.
Yeah.
So I'm like, "Ah, that money's just sitting there. I'm gonna go buy another one,
Yeah.
and I'll still be positive cash flow on both properties."
Yeah.
So, it just makes great sense. Now it's just timing for me on when I'm gonna do it, and so that's just me settling up with the IRS.
Fun
So I
stuff.
have that little barrier, this is my
Yeah.
barrier time where I'm, like, between, October and January,
Yeah.
where I'm all clear with the IRS and I can move
Yeah.
forward.
Yeah, absolutely. I have a meeting with my CPA, I think tomorrow. It's never fun. We always do that. We always do extensions, and now the extension's about done. And we have our meet. She has all my stuff, so we're meeting tomorrow to go over the painful result.
Yeah, I'm always proud of myself. I don't do an extension as of the last year. I'm not on an extension anymore, but that means, like, I'm shut down until I pay the bill.
Yeah,
'Cause you lenders require a payment plan with the IRS in order for me to buy another property.
yeah, yeah,
So, yeah, I mean, it's all about using your money wisely, right? And
yeah.
moving it forward in such a way that makes great sense for you. Um, Justin, what inspired you to buy your first piece of real estate?
Being in the business for so long and just seeing the money that was made from it, and just knowing, a really good book, Rich Dad Poor Dad. That read that a long time ago, and that absolutely kind of got the wheels turning. We're like, yeah, I have to start building, stuff that pays me money, use my money to make money,
Oh,
leverage it. And, the first property I bought, I did a house hack. I bought a 4-unit property, lived in 1 unit, rented out the other 3 units, and that paid the payment for me where I didn't have a mortgage payment. And then that allowed me to save for the next property, which you only have to do 5% down on after 12 months,
yeah.
So that got me going. And then I just, got hooked. And and again, being in the business, just seeing people build their portfolios over time. I've had clients that I helped buy their first multi-unit, And then 10 years later, they come back when they're buying, they're refinancing or doing whatever, but I see they're retired now and they have all these commercial properties. And I'm just
Yes.
like, whoa, I missed the boat on that. Like I should have been copying you this whole time, and left a good career and now makes, $20,000-$30,000 a month just from his rentals. And
Yeah.
I'm just like, wow, that's amazing. But seeing stuff like that's just so inspirational. And it's very inspirational, and that's fueled me to keep going. And just like anything, when you see good results and you have a goal, it's hard to stop.
So then this is going to be my last question for you,
Yeah.
because the one thing I keep hearing, and we're really focusing in on like buying an investment property today. And
Yeah.
we're talking about like the opportunity for you, one, to just buy real estate, and then two, like buy an investment property, make your first property your investment property down the road. Like if you think strategically, you sit down with a great lender and their team and have a conversation about like, these are the things I want to accomplish.
Yeah.
They're going to help guide you, right, in the long term of things, including us as the real estate team.
Yeah, absolutely. It's super inspirational to see people succeed with it and really build off it.
Yeah. So then my one thing that I would ask you is, because this is the thing everyone pushes back with, is, "Oh, but I don't wanna be a landlord. There are terrible tenants."
Yeah. You know what? I'll tell you the truth. I don't want to be a landlord either. So I'm not. That's why I hire property managers. They cut me a
Oh,
check at the end of every month. They get the phone calls in the middle of the night, not me. And that's part of why I like buying out of state, because it forces you to run it like a business. I have no option to go. My dad owns rental properties by his house, and he's out there every weekend. And I'm yelling at him, hire a property. No, I could do it myself. They'll rip me off. And he's old school. He's out there on the roof doing stuff on the weekend, and his knees are bad. I'm just like, this is ridiculous. Where me having properties around the country, I can't go change a light bulb if I wanted to.
yes,
I'm stuck having to run it like a business,
yes,
which is awesome because then I don't have to be a property manager.
yes. I love when my tenants text, because I obviously am the property manager.
Yeah. Yeah.
My husband married his property manager. So I'm currently the property manager. Anyways, I love when my tenants text, because they're like, "Can you just send," they know the handyman's name
Yeah.
by name. They're all, "Could you
Yeah.
just send him?" And I'm like, "Oh yeah, of course. We'll just send him to take care of it." Like
Yeah.
truly, honestly, they don't expect me and my husband, even though like right now he's got in his head he's gonna go do this one little project and be that
Yeah.
landlord. I'm
Yeah.
like, "Okay, well, you need to go over there and do that."
Yeah. No, I don't have time for it. I couldn't do it. That's just not my thing. So, I hire a property manager. So for anybody that's their concern, it's absolutely possible. I run multiple businesses. I have 29 units across the country. I have 4 kids that I'm surprised haven't busted in here during this podcast. There's a lot going on, and there's a lot going on, and there's no way I could handle one property on top of what I already got on my plate, let alone 29 units, so it's property managers. It works. And you find them. People always ask me, how do you find them? The same way you find any professional. You check reviews, you ask for referrals. You could go on Zillow and do Agent Finder. So what I've done is I've gone on Zillow, I went to Agent Finder, and I looked up the top agents in the market I'm buying in, and I just call them, hey, I'm an out-of-state investor. Do you know any property managers that you would recommend? And I'll
Yes.
get 3 referrals. I'll look them up online. I'll make calls. And if somebody doesn't work, you let them go and find another one. But
That's right. You're
just
not
like
married
anything.
to him.
No, not at all. Not at all.
That's not a lifetime commitment when it
No,
comes to a property manager, just the mortgages.
it's not. And they're business owners. They want their business to grow. They want good reviews. They want people to come back. They want people to refer them.
Yes.
Just like any business, there's great business owners that take pride in what they do, and there's ones that just don't, and they run bad businesses, and they usually it comes out. You see
Yeah.
pretty quickly who you're dealing with.
Yes. 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 Well, Justin, I really appreciate you taking 30 minutes out of your day and hanging out and having a great conversation with us about, one, the successes you've seen, because I've watched you over, I think we've been in business together now for a decade,
Yeah, quite some
and
time.
just over a decade. And I've watched you grow your loan business, and I've watched you grow your personal real estate portfolio
Yeah,
and your family.
yeah.
And it's all been so beautiful.
Thank
You've
you.
You just do it in an amazing way that inspires others to see it's possible. I mean, and you just committed to move things forward in a way that made great sense for you and felt good for you.
Yeah, no, absolutely. And really quick before we go,
Mhm.
if anybody wants some really good tips on just saving and investing for your future, on mortgages, or on buying rental properties out of state, give me a follow at Loans by JB. Check me out on Instagram. That's actually going really well for me right now. At Loans by JB on Instagram. There's a ton of great tips and info on there for all this stuff.
Not only that, but you're also on
TikTok,
yes.
YouTube. Everything's at Loans by JB. That's the same handle for everything. So check me
Yeah.
out on all the platforms. And yeah,
He's
thank you.
rocking and rolling on TikTok. I've been impressed with his TikToks, and they're very informative.
Well, thank you.
Little tidbits here and there that are
Yeah.
just simple so that you can go like, "Oh, I can do this too."
Yeah.
Like, it's just simple information because that's what real estate is, right? It's
Yeah.
just simply deciding to move forward and saving a little bit of money to make it happen.
Yeah.
And then the
Absolutely.
money will just keep multiplying.
Yep. It starts to snowball before you know it.
Yeah, I know. I'm like, "What the heck? I actually have multiple properties too." I'm kinda
Yeah.
proud of myself.
No, that's awesome. I'm excited for you. I'm excited for you. I'm excited to see it keep going too.
Yeah, we slowly will do it. We're one property a year is my goal right now.
Yeah.
My son just sits there and goes, "Mom, we just buy one property a month." No, no, that's overwhelming to me. I can't do that yet.
Yeah.
It's all in the yet, right?
Yeah,
It's all in
it
the yet.
is. It is. It is. Believe me. I saw something that said like to save your first 100,000. Somebody did the numbers and it took them like 8 years. But
Mhm.
then to get from 100 to 5 or to 100 to 200, it took like 3 years. And then from 200 to 500, like another. Like it starts to compound and snowball, and before you know it, you look back, you're like, wow, how did I get here?
Yes,
So
100%. Well, Justin, thank you so much. Where can everyone find your lending office?
So my office is in Glendora, and everything's at Loans by JB. My website's loansbyjb.com. And yeah, so reach out anytime.
Excellent. Thank you, Justin. We will have all his contact information in the download below too. Please rate, review, and subscribe. Subscribe, and write a great review about us. We appreciate you. And of course, I already follow Justin on everything. So if you can't figure it out, just follow me and then you'll get to him. He's there. Thank you, Justin. Have a
Thank you.
fantastic day.
You too. Thank you so much.